Bitcoin versus gold. Which one is the future of money? For centuries, gold has been the undisputed champion of wealth preservation. It has served as a hedge against economic turmoil, a symbol of financial security, and the backbone of monetary systems. But in the 21st century, a new contender has emerged: Bitcoin. As the digital revolution reshapes our world, the battle between gold and Bitcoin intensifies. Will Bitcoin dethrone gold, or will the two coexist in a modern financial system? Let's dive deep into the strengths, weaknesses, and future potential of these two powerhouse assets. Scarcity and supply, the ultimate measure of value. Gold has been a prized asset for millennia, largely due to its scarcity. While more can be mined, the process is costly and time-consuming, ensuring its controlled supply. This has allowed gold to retain its value over generations. Bitcoin, however, takes scarcity to a whole new level. Unlike gold, which still has undiscovered reserves, Bitcoin has a fixed supply of 21 million coins, no more, no less. This built-in scarcity, coded into its blockchain, makes it a deflationary asset, unlike fiat currencies that governments can print endlessly. Once all 21 million bitcoins are in circulation, no new supply can dilute its value, setting it apart as a uniquely scarce digital asset. Portability and accessibility. Digital versus physical. Gold's biggest drawback? Its weight. Moving large amounts of gold is cumbersome, requiring vaults, transportation, and security. It's difficult to transact with gold in everyday life, making it more of a long-term store of value than a functional currency. Bitcoin, on the other hand, is weightless. It exists purely in the digital realm, accessible to anyone with an internet connection. With Bitcoin, you can send millions of dollars across the globe in minutes with minimal transaction fees, something gold could never achieve. This makes Bitcoin far more practical in a world that's rapidly moving toward digital commerce. Divisibility and usability, a currency for the future. While gold can be melted into smaller pieces, using it for everyday transactions is unrealistic. You can't easily pay for coffee with a gold nugget. Bitcoin, however, is divisible down to 8 decimal places, meaning even a fraction of a cent's worth of Bitcoin can be transacted. This makes it not just a store of value, but a practical means of exchange, especially in a world increasingly reliant on digital payments. Security and verifiability, the risk of fraud. Authenticating gold requires expert testing, as counterfeits and diluted gold bars remain a problem. Bitcoin eliminates this risk. Every transaction is recorded on the blockchain, an immutable, decentralized ledger that ensures transparency and prevents fraud. You don't need to trust a third party to verify your Bitcoin. Its authenticity is built into the technology itself. Inflation hedge and store of value. Who wins? Gold has been a proven hedge against inflation, maintaining its purchasing power through economic downturns, wars, and fiat currency collapses. Central banks hold massive reserves of gold to back their economies. Bitcoin, however, has an even stronger anti-inflationary argument. Unlike gold, which can still be mined and added to the global supply, Bitcoin's fixed cap ensures absolute scarcity. As inflation erodes the value of fiat currencies, Bitcoin's appeal as an uncorruptible, deflationary asset becomes even stronger. ROI. Gold versus Bitcoin. The numbers don't lie. Investors care about returns, and this is where Bitcoin dominates. Gold. Over the past 50 years, gold has delivered an average annual return of about 7–8%. While steady and reliable, it hasn't generated life-changing wealth. Bitcoin. Since its launch in 2009, Bitcoin has shattered expectations. Its ROI has exceeded thousands of percent, with a 10-year return surpassing 1,000%, far outpacing gold's modest 50–60% increase over the same period. While gold offers stability, Bitcoin offers explosive growth potential, though with higher volatility. The question is, do you want slow, steady gains or the potential for exponential wealth creation? Bitcoin to gold ratio. Shift in power? The Bitcoin to gold ratio measures how many ounces of gold one Bitcoin can buy. This metric is key to understanding Bitcoin's rising dominance. In 2013, the ratio was low, as Bitcoin was still an emerging asset. By 2017, Bitcoin surpassed gold's price per ounce for the first time. As of recent years, the ratio has soared, with one Bitcoin able to buy multiple ounces of gold. This trend suggests that Bitcoin is rapidly gaining acceptance as a store of value and may eventually outshine gold in the long run. Adoption and regulation. The final barrier. Gold's advantage lies in its widespread acceptance. Governments, central banks, and institutional investors all recognize its value, and it has a well-established market. Bitcoin, while gaining adoption at an unprecedented pace, still faces regulatory hurdles. Governments and financial institutions are still figuring out how to regulate and integrate digital assets. However, as more institutions adopt Bitcoin and regulatory frameworks become clearer, Bitcoin's position in the financial system will only strengthen. The digital age demands digital money. Gold's primary uses remain in jewelry, electronics, and as a reserve asset. But in an increasingly digital world, its utility is limited. Bitcoin, however, is built for the internet era. It's programmable, borderless, and can integrate with smart contracts and decentralized finance, expanding its potential beyond just a store of value. In a world moving toward Web3 and digital ownership, Bitcoin fits the future far better than gold. Final verdict: will Bitcoin replace gold? Gold has withstood the test of time, and its value isn't going away anytime soon. However, Bitcoin is proving to be the next evolution of money, one that aligns with the digital economy's needs. While some argue that Bitcoin and gold will coexist, serving different roles in a diversified financial system, others believe Bitcoin is on track to become the ultimate store of value in the 21st century. One thing is certain: Bitcoin isn't just an alternative to gold. It's a revolution in how we think about money and wealth preservation. Do you think Bitcoin will overtake gold as the world's premier store of value? Let us know in the comments. If you enjoyed this analysis, please subscribe to our channel and follow us for more insights into Bitcoin, finance, and the future of money.